Well, let's get straight into a look at the markets picture. We've got the JSE on the uptick today. And of course, we've had China adding to some optimism, as I was saying, ahead of the break, saying that it will continue to invest in Eurozone government debt. How are you reading that story and all that's playing out right now in Europe?
Yeah, I mean, we had a couple of things happen this morning. Firstly, they called off the EU meeting where they were meant to finalise the disbursement of that 130 billion euros to Greece. They called that off, but then China's come to the rescue, supposedly again. You know, we've heard the story before of China's involvement in the EU bailout. Although, you know, some more solid comments out of them, at least this time. You know, when the Premier is basically meeting with EU officials, and he said that China pledges to get more deeply involved in the euro debt crisis. So we'll have to see how that pans out. I mean, they do have reportedly $3 trillion sitting in reserves at the moment. That could theoretically, you know, give a good helping hand to Europe.
Certainly where the call's been made as well for Europeans to produce more attractive investment products. You know, this is a story that's been playing out for the longest while, and it's set to continue for a while yet. How are you, filtering in local news that's been making headlines here in South Africa? We've had quite a few company earnings and trading updates filter through, Richard.
Yeah, I mean, today Anglo's, was under pressure from this morning. I see Citigroup downgraded them to a sell. I know we have our sells. We have Anglo's as a sell and Billiton as a buy. So, you know, that's hurting the stock there. And, you know, the local market's been stuck in a tight range, because of what's going on globally. You know, we're tied to what happens in Europe, America. So our market's at that mercy. And we've been bouncing in a very frustrating, 500-point range over the last couple of weeks. And that's currently where we're sitting at the moment.
Let's drill down into those Anglo Gold Ashanti numbers. Q4 profit stumbling, and we've had with that the share price stumbling back this afternoon. We're trading just over 1.5% to the downside at this stage of the game. Richard, what have you made of those numbers? Because the market's clearly disappointed with what's come through, despite that increased dividend that's come in at 200 South African cents.
Yes, I mean, they surprised on the dividend side. They came in with a dividend double the size of the dividend in the previous quarter, also twice what the market was expecting. Problem, though, is their headline earnings came in well below expectations. Market was expecting somewhere in the region of 105 cents per share, came in at about 75, 76. The biggest contributing factors to that seem to be a number of things. There's some environmental provision write-down. I don't quite understand that myself, but that equates to about $105 million, and also an increase in cash costs as well, and that's what they're citing it to. On our side at SPG Securities, it still is it actually was our favorite pick in the gold sector. Currently, we favor Harmony. Anglo Gold, we have a hold on with a target price of 406. So, we do see some further upside in Anglo Gold's price from here.
Within that Anglo-American family, but looking at the other side of the precious metal spectrum, we've got Anglo-American being revised in terms of its status to neutral from buy, and that by UBS. What have you made of that rating, and how are you viewing the platinum miners as a whole, Richard? Because they've been likened over the recent past to becoming closer and closer, or they've been likened to the gold stocks at this stage.
Exactly. I saw a headline the other day saying, are the platinum stocks our new gold miners? Let's hope not. But from Amplatz's results earlier on this week, they weren't impressive. And our analyst as well subsequently has also downgraded their target. I mean, we've moved our target price now down from 530 down to 500, well below where Amplatz is currently trading. So we were quite surprised with Amplatz's reaction in the market, or the market's reaction to Amplatz. It rose after the results. We thought the results were pretty poor. And, their outlook is looking pretty dismal as well. They said their near-term outlook is pretty bearish. We're seeing it in their costs. Costs are spiraling out of control, and these companies are struggling to make money. So we are pretty bearish on the sector itself. I wouldn't be venturing into the sector. Impala, however, we got a target price on them of about 190 Rand. So we'd be favouring Impala at these levels.
Well, of course, we're anticipating Impala Platinum's numbers due to be released tomorrow. So we're looking forward to those, along with Woolies. And we've got retail sales numbers expected out today, and broad-ranging estimates in terms of what's expected for the December period. It's going as high as possibly seeing a 7.7% growth coming through there. What are your expectations for Woolies within that retail category?
Yeah, I mean, well, we had our expectations, but they put out a trading update in the last week or two, and they've guided the market saying that their earnings are going to be between 30 and 35% higher. We had our estimates a little bit lower than that, so that's a positive sign. Woolies, on the retail sector, we feel that most of the stocks are fully valued at these levels. Woolies happens to be the only or the most positive rating that we have. We currently have a hold recommendation on Woolworths with a target price of about 43 Rand 65. So a little bit of upside potential there in that stock.
Little bit of upside potential. So, any hope that this price is going to rally more than it has, Richard, pretty much being squashed at this point?
Yeah, I mean, okay, it feels like these retailers have been overbought for a long time now, but that can continue. So I'm not saying that it can't go push up further, but on our valuations, we feel that it is pretty much fully valued up at these levels.
Overall, what kind of exposure are you looking at towards that retail complex of the market?
Once again, not so much favouring the retailers or the platinum miners.
Yeah.
We like the diversifieds. And our top pick in the diversified sector would be Billiton, mainly due to its diversification and its reliance isn't so much on the metals. They've got exposure to oil, thermal coal and all of that. So it seems like a better bet or a safer bet in an environment where we're potentially going into another recession or are in one.
Well, we're halfway through the trading week this week, Richard. What are you looking forward to as we start, to go downhill from here in terms of markets and possible catalysts for market direction?
Yeah, I can't see many things pushing out. I mean, we do feel that the market can push on possibly higher from here. It can remain in an overbought territory for a long time. Guys call it the pain trade. Nobody wants to buy the market, but because it keeps edging higher, people remain underexposed to equities and are being forced to buy the market. So we could see more of that. But I expect us to stay, once again, in a very tight range. I don't see much more upside potential from where we are here. And as long as things remain uncertain in Europe, we're going to keep bouncing around in this very tight range. The only thing I see us breaking out is if something negative had to come out of Europe. If, for example, Greece had to exit the euro. There's talk about that may be a good thing long term, but if Greece had to exit the euro at this point, there'd definitely be some sort of knee-jerk reaction and a bit of turmoil in the markets. And I think that would be the next big thing that could affect our markets.